right now on YouTube. So I will paste a copy of the link in the Telegram group. If you are yet to join the Telegram group, you are missing out. So what you need to do right now is to get your hands on the link on my bio. Get your hands on the link in my bio on my TikTok profile. Alright, so I pasted the link right now. The link has been pasted on my Telegram page. I mean my Telegram group. Yeah, it's a Telegram group. So you can access us now on the Telegram, on YouTube, I mean, and you can ask your questions on YouTube. All right, so we are good to go. Thank you guys. Happy Sunday to you, everyone from YouTube, the YouTube family. Thank you for the support, for the subscription, for the like, for the share, for the comment. Thank you guys on TikTok. Thank you so much. You guys are wonderful. So today we are going through the live market analysis. So I'm going to tag this as the weekly market analysis, right? So which is for the 18th of December to the 22nd of December 2023. So we are going to go through the market, through the weekly market forecast, right? So we have different assets suggested by traders in the live stream today. So if you are watching us from the YouTube, you can as well submit your suggestion. That is any asset you want us to analyze in the live stream, and then I'm going to take my time to go through their asset, right? So for now, we have some asset being suggested from TikTok, right? So we have the Euro USD suggested by Gennady from Gennady Bevo from Moldova. We have gold by Prince KY from Nigeria. We have British pound sterling paired against the USD from a trader from Nigeria. We also have Ethereum paired against the USD by Elijostics from Nigeria. So thank you guys. And you all know what to do, guys. Once you're in the live stream, take the opportunity, take advantage of your presence in the live stream to suggest any asset you want us to analyze. All right, if you're watching from YouTube, you can do that right there. Okay, so let's get started. So the first asset we have on our list today is Euro paired against the USD. So we are trying to go through the weekly forecast. Okay, so we are going to switch our chart to the price of the euro paired against the USD. So here comes the chart of the euro USD. This is what I have on the price chart of the euro USD. So the first thing we're gonna check out is we have to go to the weekly chart. So based on what we have on the weekly chart, these are the key level structures I am watching on this price chart on the weekly chart. So you can see that. So let's try and remove all this key level structure right and try to construct a new key levels on the price. So for those of you who are watching me, you can as well make a screenshot of these live streams. You can use these key level structures to verify the key level structures you have on your price chart. So I'm going to be calling out the key level structures right now on the price chart, so you guys can get a piece of paper and a pen so that you can write out this key level structure. So during the live stream, you can as well try to modify your key level structures. This is going to be helpful for traders who are finding it difficult on how to professionally mark key level structures in their trading chart. So we have more suggestions coming in. We have a gold, US oil, BTC, GBP, USD, US 30 by FSP Trading. FSP Trading, you are welcome. Please tag your country. So gold has been suggested, GBP, USD have been suggested. So I'm gonna pick US oil and BTC paired against the USD and US 30. So this asset we have been suggested by FSP Trading from our TikTok profile, right? So I dex FSP from Nigeria, right? So okay, now let's mark our key level structures on our euro paired against the USD chart. So the first thing we will have to look out for on our price chart is we have to look out for the major turning points at the high swings and the major turning point at the low swings. So these are the levels we want to look out for on our weekly key levels. So on our weekly chart, I mean. So the first thing I have to do right here is I have to mark the high turning point, which is the resistance, which is the highest peak, that is the highest resistance within this medium of this asset based on the weekly chart. So I'm gonna mark the highest peak right here, which acts at the price of the 1.2, that is 1.1, I mean 1.12801. So this is the turning resistance structure right here. This is the turning point at the resistance structure, and then I'm gonna mark this key level structure with horizontal line, and then I'm gonna change this color of this horizontal line to be orange. You could use it to be, you could make yours to be any color you prefer. It could be red, it could be orange, but I prefer mine to be orange, right? And then the next thing I'm gonna do right here on this price chart is that I'm gonna navigate all the way down to look out for the low turning point right here. That is the major turning point at the low swings on the price chart. So which is the price level right here, which we have at the price of the 1.04507. So I'm gonna look out for the most touchy zone in this market. So as you can see, we have a lot of zones which can be connected on the price chart right here. So I can connect my horizontal level right here. Okay, if you connect it right here, you are technically right. You are technically right if you connect it right here. And there's something I want to show you guys is we have some key level structures which we can as well connect on this weekly chart. You know, we have a key level structure right here as a support structure. We got it right here. We got a support as resistance for the bull swing right here. So what I'm gonna do right here is I'm gonna try to move my key level structure to the left hand side so that I can catch the most touches. You can see that. So this is my key level support. So right now our key level support at the price of the 1.04873, right? Okay. So we have our major resistance structure at the 1.12801, and the next key level structure we have to mark on this price chart right here is we have to look out for another major swings on this weekly chart, and we have to look out for the most touched zones in this time frame. So what I'm going to look out for right here is I want to look out for the most touchy zone right here. I have a swing level right here. This is a swing level right here, you know, before we got price moving from this level all the way to this high swing right here. So we can tag our key level structure to the swing we got right here. Okay, so we try to mark this level as a potential key level support. Actually, it was being broken right here. You can see the strong bullish breakout of price right here. And the next one we can apply our key level structure right here in this market is the peak right here, which we got right here. That was on there. I think that this medium right here was this was in the 30th of January 2023. This was the beginning of this year 2023. We had another resistance structure right here. This was on the 1st of May 2023. So we can as well tag this level as a resistance structure. So I'm going to apply a horizontal level to catch this peak high right here, likewise this peak high right here. So I'm going to connect it to the left hand side. So let's remove these drawings and then let's construct our key level structure right from the peak right here and then to the left hand side. So we are done with the weekly key level structures now on this price chart. So the next thing we have to do right now is to move to the day chart and then try to look for areas which we can try to we move to the day chart and try to align this key level structure to fit properly on the day chart. So based on what we have on the day chart right here, we have the key level structure. We can move this key level structure a bit lower. Okay, can move it a bit lower, okay, to be at the low of the 1.04470, and our key level support right here is okay at the price of the 1.06363. We have a key level support right here. We have no price cutting this zone right here. We can leave it right here. And if you are somehow confused at this medium right here, you can use your rectangular chart box to mark this level right here. Okay, so you can know this level right here, it's a kind of a potential resistance structure for price. Okay, so but I like to keep my chart to be clean. So I like to keep my chart to be simple, to be clean. So I don't like having a lot of no drawings on my price chart. So I'm just gonna remove this no rectangular box right here. Okay, so this is what I have, and then I can try to move these key level structures right here to fit in properly. Maybe at this zone right here is okay. Okay, this is good. So right now this is what I have on my weekly chart. So I'm gonna treat this area, this resistance structure right here, as a point of interest. You can see these are point of interest right here. So I'm gonna treat this level as a point of interest. Okay, so whenever price get to this level right here, I'm gonna be looking out for a strong technical actions at this medium. So this is what we have on the weekly chart. And what else again we have on this price chart right here? We have some minor key level structure which we can as well construct on this key level structure right here. So the first right here is we have a minor key level structure. Right here, let's get this off. No, we have some minor key level structures right here. We have a higher high swing right here. We got a rejection swing right here as a higher low swing. So we can as well construct a minor key level structure at this level right here, just to catch this structure right here. So we can as well fire it all the way to the left hand side. So you can see we have like key level structures right here. So we know, okay, at this medium right here, we add a potential structure right here. Okay, so you got it. So and we can connect another trend line to try to actually okay, we can construct our trend line right from the last swing higher low structure right there. We try to measure the flow of price trend in this market. So we have our trend line, we can have it. Let's construct from the last higher low swing right here. So we have our trend line. We try to capture the low swing right here. So this is what I have on my price chart on the day chart of the euro paid against the USD. So if you are watching right now, you can make a screenshot of this price chart. This is how your chart should look like, especially if you're a beginner trader in the market. If you don't have an in-depth understanding on how you can construct key levels in the market, this is how your key level structure should look like, and this is how you construct your key or trend line in the market, right? So if you're right here, you are struggling to construct key level structures, this is how your key level structure should look like and your trend line, right? Okay, guys. So let's move on with the analysis. So based on what we have right here on the day chart of the euro USD, now the question is which way is the market trying to move to? So here's what we need to watch out. We are looking out for price to test a key level structure right here, but price hasn't yet tested this zone, right? So this is a point of interest for us. You can see that. And the rising trend line right here is another point of interest for us. Likewise, the minor key level structure right here is another point of interest for us. So what we currently have right now is the euro USD is trading at the mid trend. Euro USD is trading at the middle of the trend, and you all know at the middle of the trend, it's advisable you stay off the market. So at this medium right here, the market is confused. Anyways, some traders could be looking at to charts right here based on maybe the possible double top we got right here. Some traders could be looking at to chart the first top. We got a first top right here. We can tag this level right at the T1, the first top, and right here as the top 2. Okay, so some traders might have been looking at to short this market right here. Well, anyway, if you are looking to short this market right here, you could be right, but based on my own trading strategy, my own trading plans and rules, I always like to short or look for long entry at a major key level structure. You can see that. So I always like to look out for major key level structure, just like the breakout we had right here, or minor key level structure right here, and the resistance structure right here. Actually, I should have taken this trade right here, but last week I was already on some other trade, so I didn't want to add to my risk in the market. So this is why I neglected this market right here. And then as well, based on the pattern breakout we got right here, it was kind of very risky, because actually I was looking out for a pullback. Maybe I could just send out these trading signals to traders in my Telegram group, but unfortunately the market never offered a pullback. So this week right now, this is what you should be looking out for as a trader. I think if you can look out for price to test this trend line and at this level right here, these are the zone we should be looking out for trade opportunity. Alternatively, if price can test this resistance structure right here, these are the point of interest for me. So this trading at this zone right here is much safer than when you try to trade at the middle of the trend, because at the middle of the trend you can't really have you don't really have a strong technical reasons for you to go long or short at the middle of the trend. So it's better to look out for key level factors. You try to build up confidence factors before you execute a long or short entry. So based on what I have right here, the factor which could give us a short entry right here, it's not as stronger as if it had been at the major key level resistance, or maybe at a minor structure, or maybe at a dynamic structure right here. So this is one of the reasons for now on the euro USD. I'm still watching this asset to see what is going to carve. Maybe the market is going to break all the way down and maybe give us a double top, and then we could see a retest of the neckline for the continuation of the downtrend. Alternatively, maybe price is going to test this trend line to give us the confirmation. Remember, it takes 2 points to construct a trend line, but it takes 3 points to confirm a trend line. So maybe the price is gonna give us a confirmation right here. You know that? And then you all know, as you all know, I'm not a fan of taking the third test of trend line, right? So based on what I can see right here, I'm gonna be looking out for see how price is gonna move next week. Maybe price gonna hit this structure right here, or maybe react right here, or maybe at this zone right here. So in summary, I am not comfortable with the setup I have on Euro USD. So currently right now, the market on Euro USD is crazy, and the market is not yet made its decision which way it wants to move to. So based on these factors, I would rather divert my attention to other assets which are easier to analyze. So this is my view on Euro paired against the USD. Okay, so we have GBP paired against the USD. Please state your country. GBP paired against Canada. State your country. IK suggested for GBP paired against the Canadian dollar. So based on what I have on Euro USD, I don't like the kind of a price pattern right here for trade entry or for trade long or short entry. So the market is at the middle of the trend, right? So that is what I can see on Euro paired against the USD. So for now, just exercise patience, right? So let's go on the gold. Let's check out gold. Based on what we have on gold. So before we proceed further on gold, you can, okay, we have IK from UK, from United Kingdom. So before we proceed further on gold, we need to check our weekly chart since we are analyzing this market from the weekly chart. So if you're a gold trader, you can make a screenshot of this chart right now. Make a screenshot of this chart so you can have an idea of levels you should be watching out for on your chart. You know, in the last analysis I gave on gold, I told you guys my views on gold, and I told you guys I'm not looking out for a short entry. I'm looking out for a pullback of price based on the strong bearish candlestick reversal bearish candlestick we had on the weekly chart. I told you guys I'm not looking out for a long, I'm not looking out for a short. I told you guys I'm staying out of gold. I want to see how price is going to react to this resistance structure right here, and that's what my decision last last week. And you can see what actually happened. Market was still just going through medium of kind of state of indecision. So I told you guys I'm actually looking out for a retracement of this bar, and then I am yet to see a retracement of price to the resistance structure right here, or maybe to the 0.618. No, for as long I can't see that, then it means there isn't any trade for me on this asset. So I'm still currently waiting to see how price is going to retrace. I want price to retrace to the resistance structure, or maybe to the 0.618 Fibonacci golden number. I want to look out for retracement. So that is what I'm looking out for on gold. For as long I can't see any retracement right here, I'm not going to be looking out for a short or a long entry. And the last week, a trader was trying to share with me his chart, and then I think the trader was in the live stream last week, and the trader told that I was a trader in the live stream last week, and the traders told us there is a head and shoulder on the 4-hour chart. And I told the trader, I said, this is not a head and shoulder. I don't know if any of you guys in the live stream can record that. So the traders told us this was the head and shoulder chart pattern, and I told the trader this is not a head and shoulder chart pattern, right? You can see this was a trick, and the market later reversed uptrend, upswing. So this is not a head and shoulder chart pattern. For those who thought this was a head and shoulder chart pattern, I stated it in the live stream last week. So currently right now, gold is still in a state of indecision. You can see that market is just bouncing in a choppy market. It's a choppy market. So I can't yet see any reason to look out for any short or long entry on gold, not until price can test this resistance structure right here. And I told you guys last week, I said, if you want to take this asset right here, the best thing to be looking out for trade opportunities should be at the support structure right here, or maybe at the resistance structure right here, not at the middle of the trend. I told you guys the risk were involved when you take or when you trade an asset at the middle of the trend. It is very risky when you jump into the market at the middle of the trend. So don't ever look out for trade opportunity at the middle of a trend. So you should be looking out for trade opportunity at a key level structure, right? So those who try to long from the key level support right there actually add some profit in their portfolio, and those who try to short at the middle of the trend right here, you can see the market reverses them up. So That is why I always support the idea of looking out for trade opportunity at the technical key level structure. So based on what I can see right here now, the market is in a state of indecision. The market is confused on gold, not until we can see price testing the key level resistance right here, or maybe price making a retracement to the 0.618. that is the retracement of this bar all the way down. You can see price making a retracement all the way to the 0.0, that is 0.618. That would be nice, all the resistance structure right here. So that's my view on gold. So next week I'm still watching out gold to see what gold has to offer. Okay, so that is what I have on gold. And next is British pound sterling paired against the USD. So let's go through the GBP paired against the USD. So the first thing we're gonna do right here is to move to the weekly chart. So we are gonna try to construct our key level from the weekly chart. As you all know, the first thing we do in the market is to construct our key level from the weekly chart. So here is a weekly chart of gold, right? So I already constructed my key level on this price chart. I have the turning point high at the price of the 1.31355, and then I have the next key level resistance at the price of the 1.2670. You can see this level actually acted as resistance last week. We have a key level support low, we have another key level support, and another key level support down. So for those of you you are interested in the key level structures on the price of GBP paired against the USD, we have the turning point at the price, that is a resistance structure. The highest peak on the weekly chart right here is 1.31382, whereby the next key level structure acts at the price of the 1.26709. The next key level structure acts at the price of the 1.23053, and the next key level support acts at the price of the 1.20729, and the next key level support acts at the price of the 1.18481. So these are the key level structure we are monitoring based on the weekly chart. Now let's check on the day chart. On the day chart, this is what we have on the day chart. So let's try to apply this key level structure to fit properly on the day chart. So these are what we have on the day chart. Okay, we are good to go on the day chart, right? Now this is what we have on the day chart. So let's look out for other key level structure we can find on the day chart. Let's look out for other key level structures, and let's see how we can construct our trend line. So right from the swing higher low structure right here, we can fire our trend line all the way back. So this is what we have on the chart of GBP paired against the USD. You can see that. So for those of you who are willing to trade GBP paired against the USD, you can make a screenshot of this price chart right now. So this is what you should have on your day chart. This is how your day chart should look like. You can see that right now. So the next question is what are we going to be doing right now on this price chart next week? Price already broke the resistance structure at the price of the 1.26709. This was resistance for price right here in May. You can see resistance right here. We got it at the support right here. Support, price broke this support right here all the way down. Price tested this resistance structure. Price is currently testing this level. So we have a breakout of this major key level resistance next week. So the safest place to trade this asset would be to look out for retracement all the way down. You can see retracement. Already we have a confirmation of this trend line. This was the first test of the trend line right here. The first test of trend line. We have the second test right here. We got a confirmation of this trend line right here. So next week, it is better to wait for a pullback. If we can see a pullback right to this trend line, if we can see a strong technical bull entry, then that would be nice for the continuation of this bull rally. So that is my view on GBP paired against the USD. And I swear you guys have to be very careful before you make an entry. You have to be very careful before you make an entry. You have to make sure you look out for strong technical long entry. You don't just have to jump in right here. You have to look out for a strong technical bull entry. But based on what I can see right here now, this is a strong bullish momentum, bullish force. So I'll be looking out for a pullback. You can see a pullback for the continuation of the rally. That would be nice. So one of the tools I'm going to be using to look out for a pullback right here is my Fibonacci retracement tool. Right from the swing higher low right here, I'm going to fire it upward right here. You can see that. So the application of my Fibonacci retracement tool right from the swing higher low to the higher high swing right here. I'm going to be looking out for a pullback and a pullback to the 0.618 Fibonacci retracement level, right? So if I can see a pullback to the 0.618 level in combination with the rising trend line right here with a strong bullish price action candlestick back, then that would be a nice reason for a long entry. So that is my view. And then guys, you have to be very careful before you make any entry right here. Okay, you have to be very careful. And as well, let's try to clear off this trend right here. Okay, now let's go on the 4-hour chart. Based on the 4-hour chart, this is what we have on the 4-hour chart. As you can see, let's get off this Fibonacci retracement tool. Based on the 4-hour chart, we had a minor key level structures on the 4-hour chart. Right from the structure formation we got right here, we got a minor structure right here, which acted as a neckline for this double top. You can see that we got a double top right there before the market precipitated all the way down. Market broke this neckline right here. Okay, so let's hope price is gonna make a pullback to this neckline structure. So what we have right here is we have another possible minor structure right here. So I'm gonna construct this minor structure right from the neckline of price right here. Okay, right from the neckline of price, we fire it all the way to the forward, the right hand side. So you guys can see right now. So based on the 4-hour chart, we had a minor structure as a neckline right here, neckline. We had a test of neckline, key level, test right here. We had a breakout of price. So let's hope price gonna make a pullback to this level, and we look out for strong technical long entry for the continuation of the uptrend, right? So the application of our Fibonacci retracement tool right from the swing low right here to the peak higher high in this market. So you're gonna see we have the 0.618, which aligns to the breakout of the minor key level structure of the neckline at the left hand side right here. Can see that we got a resistance on the resistance right here, a strong bull breakout. So what we are looking at for right now is a pullback to this minor structure, which as well aligns to the 0.618. So this makes it a strong technical confluence zone for price. And then as well, it will become stronger if price can as well test the minor structure with the 0.618 as well with the rising trend line right there. So this is a very strong technical reasons. This is a strong technical zone in the market. This could be a strong confluence factor for us to look out for a long entry on the GBP paired against the USD. So this is why I prefer the GBP paired against the USD to Euro paired against the USD. So this is how I filter out trade. So based on what I can see on the GBP paired against the USD, I will prefer to trade GBP paired against the USD instead of trading the Euro paired against the USD, because based on what I can see on the GBP paired against the USD, it has a lot of strong technical factors when compared to Euro paired against the USD. So this is why I prefer to go with the chart of the GBP paired against the USD. So I'll be looking out for trade opportunity on GBP paired against the USD. So next week, GBP paired against the USD, it's on my list. Okay, so you guys as well can put that down. So next week, my watch list, I have the GBP paired against the USD. So like what I told you, that is how I'm going to be looking out for trade opportunity on GBP paired against the USD, right? So now let's check out what we have on Ethereum paired against the USD. This is the cryptocurrency market. So let's go on the cryptocurrency market. Euro paired against the USDT. Let's find it all the way down, up, and what we have on the Euro paired against the USDT. So first thing we check on the weekly chart. That is the first thing we need to do. Once you open our chart, we go to the weekly chart and try to see what we have. Okay, so based on what we have on the weekly chart, this is how your chart should look like as a trader in the cryptocurrency market. If you are trading the USD Ethereum paired against the USD, okay, this is what we have right now. This is how your chart should look like. on the weekly chart. So we have a key level structure at the price of the 2144. This level is currently holding as a support for price, and we have another key level structure at the price of the 1074.59. You can see that low. We have the turning point. That was the highest peak of Ethereum in its historical price actions. That is the 4,852. That is the major turning point of this asset. So we already marked that. And we have another swing level right here. We could mark this level as well on the weekly chart. So this is nice. So based on what we have on the weekly chart, these are the key level structure we have. Price broke this falling channel from the weekly chart, and the price broke all the way up. So let's check on we have a rising trend line. You can see that rising trend line which has been acting right from the swing of price that was on the 13th of June all the way to 28th of November 2022, all the way to 16th of October 2023. This rejection, this third rejection of confirmation of trend line actually led to the bullish rally on Ethereum. So let's check on the day chart. Based on the day chart, this is what we have on the price chart of the day chart. This is how your chart should look like if you are willing to trade the Ethereum, right? Price broke out of a triple bottom. Got a triple bottom structure right here. You can see that. So we got a first test right here. We got a second test. We got a first bottom, second bottom, third bottom. Price broke out right here, and then it resulted into an aggressive bull rally. So what are we looking out for on this asset based on what we have right here? You can see price broke a falling channel. So you all know I like to look out for retracement of price. So the tools I'm going to be applying right here is my Fibonacci retracement tool. Let's see if we can have an opportunity to have a level which could align to price on the chart. So based on the application of our Fibonacci retracement tool right here, if we can see a price making a pullback, maybe to the 0.618 but I am not expecting price to fall back into this broken channel right here. So it's likely price could find a support at the 0.5 Fibonacci retracement level for the continuation of the bullish rally on Ethereum. So that is what I can see based on the day chart. You can see based on the day chart, based on what we had on the day chart. So let's hope price gonna make a pullback. Anyways, price could still make a sharp pullback into the 0.618 and find a strong bull rejection. Alternatively, maybe to the 0.5 before finding a continuation to the uptrend, right? So this is what I can see on the Ethereum. But anyways, if price should fail to make a pullback, then it means this rally is still up on the Ethereum pair against the USD. So as you all know, I will never want to jump in at the extreme high of a fast moving trend. Anyways, based on what I can see right here, I can see a kind of a weakness in bullish momentum, right? Not until we can see another maybe a pattern which could support a bullish interest for a more bullish rally. Just like what we had right here, we got a double bottom right here for the continuation of this bullish rally right there. So if we can have another double bottom right here, this could be a continuation for the bullish rally. So this is what I can see on the Ethereum. So on Ethereum, if you are looking out to invest right here, you could be looking out for a pullback of price as well. Let's see if we can find a way to apply our trend line to try to measure the movement of momentum. Right, our trend line from the swing right here and then all the way up. Okay, so we still have price still respecting this trend right here. Price is still respecting the trend line we got right here. So take note, we are just trying to use this trend line to measure or to monitor the flow of the market trend right here. We are not using the trend line right here primarily as an entry strategy. Okay, we are just trying to use this to measure the flow of trend. So we just want to know if the market is still in an aggressive bull trend. And based on what we can see right here, the market is still in an aggressive bull trend, because based on the application of our trend line right from the swing low right here, we got a test structure right here which we can tag as a higher low, and the market right here is testing this level right here as a higher low. So let's hope for a in order to reduce our risk, I think it's better we can see a break of this trend line all the way down to the maybe 0.5 before we anticipate for a long entry on the Ethereum pair against the USD, right? So, and the best way you can try to reduce your risk on this asset is if you can try to hold, because if you want to speculate right here, it means you want to hold, right? So this is the terminology in cryptocurrency. That means you want to gain ownership of this asset, right? It's different from when you speculate, right? When you speculate, you want to make money through the differences in the price appreciation and depreciation. Okay, so one of the platforms you can hold and you can speculate is Binance. Okay, you can do that on Binance, right? So someone said, good evening, bro, still enjoying my long on Nasdaq 100. Oh, I'm happy for you. You are still enjoying a trade on Nasdaq 100. Someone said, please add the requirement to learn this. If you want to learn this, click on the link on my TikTok bio to join my class, right? So based on Ethereum is still an uptrend, but if you want to make an entry right there, I think you look out for a nice decent retracement. You can use the Fibonacci retracement too for retracement, but if the trend line right here keeps on holding price for a more bullish interest, it means the bull rally still continue up, right? Good. So what do we have on US oil? Let's go through US oil. Based on what we have on US oil, I've been monitoring the US oil since last week, and based on what we have right here, the market hasn't yet given me what I was looking at for last week. So the market is still in this state of indecision. You can see right here, the market is still crazy right here. So for now, nothing is yet confirmed. Just like what we had right here, there was a trap right here. The market reverses downward, so there could be a trap right here for the more downtrend. So the best one to be looking out for trade on the US oil is at the major key level support, which acts at the price of the 67.135. You can see the major support structure right here. So if price can test this level right here, this is the safest zone to look out for trade entry. Alternatively, maybe at the resistance structure at the price of the 74.259. At this level right here, maybe for a short entry, or at the support at the 67.13, maybe for a long entry. So at this medium right here on US oil, it's as a risky zone. So the market is confused right here. So don't jump in at the middle of the trend, right? Okay, look out for a trade opportunity at the major key level structure or maybe at the major support structure. So that's my view on US oil, right? And let's check out BTC paired against the USD. BTC paired against the USD. Let's scroll the chart all the way up and check out the king of cryptocurrency based from the weekly chart. What do we have on the weekly chart? So let's just get this off right here. Based on the weekly chart of BTC paired against the USD, so these are the key level structure you should have on your chart if you are a trader in the Bitcoin community. This is what you need to have on your price chart. You can see that price is currently approaching the previous low high swing we had right here. We got a low high swing right here. For those who are longing, they are actually longing to resistance structure right here. Longing to resistance structure right here. So this level right here could attract more bears to short price all the way down. Okay, so you all know I always emphasize on not jumping into the market at the middle. Don't jump into the market at the middle of the trend. If you try to jump in at the middle of the trend, you are putting yourself into risk. You are exposing yourself to a lot of risk. You look out for trade opportunity at a technical strong zone, at the technical key levels, right? At the technical key levels. So these are the zones you look out for trade opportunity. Technical levels in the market. These are the zones you look out for trade opportunity. So currently right now, trying to jump in right here now is very risky because you don't know when the market could be looking out for a retracement. And if the market is going to be making a retracement, the levels which serve as a point of interest for majority of the traders is the key level structure. So you try to look out for where the majority of the traders are trying to place their trade, right? So these are the key level structures right here. Okay, so right here on BTC, we are still monitoring the market, but right now I haven't seen any technical reason for me to execute any trade on Bitcoin. And based on the day chart, you can see what we are right there. Let's hope if market can give us a pullback right from the double bottom we got right here. We got a first bottom right here, second bottom right here, breakup of neckline. So let's hope if price can give us a pullback right from the double bottom all the way to the high. If price can give us a pullback, maybe a pullback to the key level structure at the price of the 30,956, which also aligns to the 0.618 Fibonacci retracement too. This would be a nice place for us. So this would be a nice place for us. So this is going to be a nice zone for us on BTC. So let's hope for price going to make a retracement to the 0.618, which as well aligns to the resistance structure right here. You can see that resistance structure right here. Let's hope price going to make pullback to this structure for the continuation of the uptrend, right? So that is my view on BTC. Someone said Isioma Ogbelu from YouTube asks, please can you see oil? I already give analysis on US oil. I give analysis on US oil. Okay, now let's check out US 30. Let's check out US 30. Let's check out US 30. And after US 30, we have British pound sterling paired against the Canadian dollar. And then we're going to wrap up our analysis with New Zealand paired against the Canadian dollars. So the last asset on our list is the New Zealand paired against the Canadian dollar. And this is from Sami from Nigeria. Okay, after that, no more analysis. All right, thank you guys. So let's check out US 30. Let's see what we have on US 30. Let's check it out. Let's check it out. So I'm gonna open my chart. Okay, let's get it right here. Okay, let's go to the weekly chart. So based on what we have right here on the weekly chart, you can see the bull trend still continue upwards. This is a strong bull aggressive entry. So in this type of entry, if you want to jump in, wow, this is going to be very risky. This is going to be very, very risky. You can see a pullback. The best zone to look out for a breakout is at the medium of consolidation. At the medium of consolidation, when the price break up, you can make a breakout strategy. But right now, seems we are figuring out some kind of a ranging medium, just like what we had right here on the 4-hour chart. You can see the ranging medium right here. Let's check on the 1-hour chart. This is what we have on the 1-hour chart right here. You can see after the consolidation phase right here, price broke out and the trend continues upward. So it is better if you can see just like what we had right there, maybe at this zone once again, then continuation, breakout. Okay, so for those of you who are looking out to join this rally on this asset right here, on US 30 right here, you have to repeat what we have right here. You can see that a consolidation phase right here and the breakout. So we can see a consolidation phase right here, a breakout. So this is the best way you can approach this asset right here. Okay, so you see a phase of a rectangular formation, a breakout, because you are trying to trade in the direction of the momentum on this asset. So this is the easiest way you can try to follow this rally. Alternatively, if the price should make a massive pullback, the next key level structure is the key level at the 36,550, that 570 right here. You can see that. That is the 36,570 based on the weekly chart. So on the weekly chart, zoom out your chart from the weekly chart. You're gonna see we have a minor structure right on the weekly chart, and then we have another potential key level resistance above right here. Okay, so this is what I have on the US 30. We have some minor key level structures right here as well, broken up. Okay, so that is my view on the US 30. US 30, for those of you who want to take a breakout trading strategy, you could be trying to look out for, the repetition of this pattern right here. It could be another pattern, right? It could be maybe a double bottom all the way down for the continuation. So just look out for continuation of pattern for the uptrend. It could be a rectangular pattern right here for continuation upward, right? Just like what we have right here. Can tag this right here as a rectangular pattern or maybe as a flag pattern, all right, for the uptrend. Can see maybe another flag right here for the uptrend. So these are the ways you can play out this asset, right? But just take note, there is no trading strategy which is infallible in the market. So anything could happen, the market will crash all the way down, all the way down, and all the way down. So that is why you should know anytime you want to execute a trade, always make sure you analyze your risk first before you take your decision. right? So let's check out what we have on British pound sterling paired against the Canadian dollar. So let's check out what we have on British pound sterling paired against the Canadian dollar, right? So GBP paired against the Canadian dollar. GBP paired against the Canadian dollar. So let's check it out. Let's start from the weekly chart. So for those of you who are looking out for trade opportunity on GBP paired against the Canadian dollar, so let's check out what we have from the weekly chart. So this is how your chart should look like if you are a trader looking out for trade opportunity on this asset. So let's just clear off all this right here and then try to make a new chart. We have the turning major points at the resistance right here at the price of the 1.73250. We have another turning point right from the 1.63063. We have another key level structure at the price of the 1.66957. And we have another potential key level structure at the price of the 1.69410. Right, so these are the key level structure we have. We have another key level structure right here at the price of the 1.60760. So this are what you need to have on your price chart from the weekly chart. Now let's go to the day chart. So these are our key level structure on the day chart. You can see how clean this chart is. So this is how you mark your key level structures. And what else again? Okay, guys, I have the British pound sterling paired against the Canadian dollar on my list. I have it on my list next week. It's among the currencies I have on my list, right? So we have a trend line right from the higher high right here, higher low, all the way up. So that's what we have. So next week, this the way I'm looking at to trade this asset. You all know I don't like to short low. So what I'm going to be looking out for next week is I want to look out for a pullback into this level structural formation right here. And look out for a pullback to this structure right here. Have my XL above and then short all the way down. Okay, so I'm gonna be making a small position size right here. Do you know why I want to execute a small position size right here? Because price is almost close to a major key level structure right here, which is the 1.69329. So this is a very risky trade, right? This is kind of a very risky trade, so you have to be very careful. So based on what I'm going to be doing right here is I want to be looking out for a sell limit order. They have my stop around above this structural formation and the target all the way down. Okay, so this is how I'm going to be looking out for trade opportunity right here next week. Let's check out on the 4-hour chart. On the 4-hour chart, you can see it's kind of very messy right here. So it's better we can see like a pattern formation right here, a pullback, right? So I'm going to be looking out for a short sell limit order, have my XL above right here, and then try to target all the way down to like 3 risk to reward ratio. So next week, I'm going to be focusing my attention on this asset, and then I'm going to be monitoring price reactions on this asset because I can see a setup of a bearish sentiment on this asset, but I'm not going to jump in right here. If you are jumping right here now, you are jumping in at the support structure. So you look out for a retracement to the upside. So you can use your Fibonacci retracement tool from the high right here, fire it all the way down. You can see that. So if we can have a pullback maybe to the half of the price formation right here, that would be nice. Okay, and we could have our short right here, have our stop at the 0.786, and then target it all the way down. We could be looking out for 2.7 or whatever, that could be around 3. All right, so this is how I'm going to be looking out to approach this asset. Anyways, whatever I'm going to do on this asset, I'm going to share with traders in my Telegram group. I'm going to share with traders in my Telegram group how I'm going to approach this asset next week. So if you're not in my Telegram group, all you need to do right now is just to follow the instruction on this whiteboard to become a member of my Telegram group, right? But anyways, I have the British pound sterling paired against the Canadian dollar on my list next week. And then don't forget, if we want to be looking out for a long entry on GBP paired against the USD, we have to be very careful. So if you're going to be looking out for a long entry on GBP paired against the USD, at the same time, you shouldn't be looking out for a short entry on GBP paired against the Canadian dollar. Because if you are longing GBP paired against the USD, you shouldn't be shorting GBP paired against the Canadian dollar, it is technically not right. This is what I mean. If you want to be looking out for a trade based on GBP against USD, if you want to be looking out for a long entry, then you shouldn't be looking out for a short on GBP pairs against Canada, right? This is going to be wrong, right? So you see that you choose one out of the two currency pairs. See that you choose to trade this, or you choose to trade GBP paired against the USD. So the best way you can approach this two assets is you look out for the strongest technical setup in the market. If GBP paired against the USD offers the best technical setup with the lowest risk to reward ratio, then we could go with GBP paired against the USD. And if the GBP paired against Canadian dollar offers the best technical setup, then we could go with GBP paired against the Canadian dollar. But based on what I can see right here, GBP paired against the Canadian dollar has a lot of risk, because if you are trying to make an entry right here and to the next major key level structure we have in this market right here, we're going to be having like a 1 risk to reward ratio right here. Because if you're going to make an entry right here to the next major key level structure right here, is 1 risk to reward ratio. When compared to the GBP paired against the USD, right here, you can see based on GBP paired against the USD right here, we have some strong technicals right here. So we have to pay attention to how price is gonna react on GBP paired against the USD. So before we take this trade next week, we also have to study market sentiment. And as well check out fundamental factors that could disrupt technical analysis right here. Okay, so whatever I'm gonna do next week, I'll always share with traders in my Telegram group. So the best way to avoid risk in this market if you're a beginner is make sure you join my Telegram group right here. I'm gonna be giving in-depth analysis, and then I'm gonna show you guys how I'm gonna approach this asset if I'm gonna trade GBP paired against the USD, or if I'm gonna trade GBP paired against the Canadian dollar, or maybe I might not even trade any of those assets and then focus my attention on other assets. All right, thank you. So let's check out New Zealand paired against the Canadian dollars. And the New Zealand paired against the Canadian dollars. Let's go on the weekly chart. What do we have on the weekly chart? On the weekly chart, New Zealand paired against the Canadian dollar. Let's check out the key level structure we have right here. So the key level structure we have on this price chart is nice based on what we have right here. These are the key level structures on the weekly chart, and on the day chart, these are what we have on the day chart. You can see I don't believe in this trend line right here, so I'm going to remove this trend line. All right, so based on what we have right here, price is still currently flowing, or this kind of very choppy market right here. So I prefer price, if price can make a pullback all the way to this structure right here, that would be nice, okay, for the continuation of the rally. Okay, and from the last higher swing from the low structure right here, I'm going to take this low structure right here to the peak right here. So if you can have a retracement to the neckline of this double bottom, this is the double bottom. It will have the first bottom, the second bottom, the neckline right here. Price can make a pullback to the neckline right here, which is going to be the 0.5 Fibonacci retracement 2. Then it's going to be a nice entry for a continuation of the trend. So this is what I have on New Zealand paired against the Canadian dollar, right? So this is based on my personal opinion. It's not intended as any financial decisions, right, or an investment advice. Okay, make sure you understand the risk involved before you make any decisions. So guys, time is up. I need to start setting up my trade. Can you discuss Euro Canada? Sorry, the time is up. My time is up. I don't have enough time again. Our time is limited. So it's time I start executing my trade setup, start looking out for how to get into the market, because the market is already open. Right now you can see the market is open. So since the market is open right now, you can see this is 18th of December. So this are the time I study the market for the next close of 4 hours, so that I can make early entry, look out for trade, opportunities in the market. I'm a swing trader. There are some setup I have already seen from last week Friday, and there are some setup I need to execute, and there are some setup I need to start placing limit orders, right? So our time is up. So if you want more, you can join our Telegram group. You can follow this link right here on the screen, this white information right here. Just click the link on my TikTok profile, and if you are watching from YouTube, just follow the link in the description of this live stream. All right, guys. So I'll be right here today or tomorrow, 12 p.m. GMT +1 for the daily live market analysis. So make sure you join me on YouTube, and I'll be right here on TikTok as well. And make sure you follow my TikTok profile for more updates. Right? Thank you, guys. So have a wonderful night, wonderful day to you wherever you are in any part of the world. Thank you, guys.